Hey Brandon, how can I avoid mortgage insurance without putting 20% down?
That's a great question, Megan, and who doesn't want to avoid mortgage insurance? Come over here, I'm going to show you exactly how you can do that. All right, so let's look at some basics first. So we're going to work off of a $400,000 loan amount at 7% interest over 30 years, and we're going to say this is 95% financing that we're basing everything on. So your principal and interest payment using those figures would be $2,661.21, and then you'd also pay mortgage insurance, everyone's favorite, of $234 per month. This is going to mean that your payment is $2,895.21 every month. Does not include property taxes or homeowners insurance. Now, first option I would say to avoid mortgage insurance is something called lender paid mortgage insurance. And what this really means is that you're going to equal a higher rate, right? There's no such thing as necessarily free. So you're taking a higher rate for lender paid mortgage insurance. And what's going to happen is you're going to take that $400,000 mortgage, and now we're at 7.375%, which is higher than the 7% we used initially. This is over 30 years, just as we did in the initial example. This is going to make your payment $2,762.70 for principal and interest. Now, because the mortgage insurance is built into the rate, you're actually saving this money. So you can see that you're, rather than paying $28.95.21, you're paying $27.62.70. That's method number one. Method number two is going to be seller paid. Now, there's really no such thing as a seller paid mortgage insurance. However, there is a seller credit that can go toward a single premium mortgage insurance policy. So if we took the $400,000 at 7%, because you're not having to take the higher rate any longer, and that's for 30 years, this is going to mean your principal and interest payment is $2661.21, just like we saw up here. Remember, it's just principal and interest. There's no mortgage insurance because it would be paid for by a seller credit. $8,000 seller credit would cover the full cost of the single premium mortgage insurance policy, and therefore you don't pay monthly mortgage insurance, saving you $234 per month versus traditional mortgage insurance, and saving you another $100 per month versus going with a lender paid mortgage insurance policy.